The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to take a look at the DAX like we usually do. As you can see, we've been in a little bit of a downtrend. It's like everything else got hit a little bit today. If we take a look at the FTSE, we're seeing the same thing. It actually had a pretty big gap down. Whether it's related to what's going on in the interest rate markets or not remains to be seen. But big things are certainly happening in the interest rate market. We've been very bearish these instruments for quite some time. If you just take a look here at this long-term weekly chart in the Treasury bonds, you'll see that we've actually got a target down there about 10 to 12 handles lower. We've now broken below the 78% retracement that came in at 38.10. I tried that yesterday for a very, very short time. I think I was in it in a total of about 12 minutes, and I gave him my 13 ticks and then said sayonara. And then I'll cover it a little bit later. But I do want to show you what's looking in these notes also, because the notes look actually even worse than the Treasury bonds. Now, we're going to get a bounce here somewhere. You see the head and shoulders pattern that we had here in the notes. And this is the largest of all the commodity contracts that we trade, folks. When we hit that head and shoulders, you'll notice that it was also a double top from 2012. What you have to realize, folks, in 2012, that was the end of a 30-year bull market. T-bonds bottomed in 82, I believe, and I believe that 30-year bull market is now over. So we're going to be in a bear market for quite some time. That's beyond our pay grade, trying to figure that one out. Right, we're now looking for support to come in down about another handle or so in the Treasury notes. We're down 7 weeks in a row. That in itself makes it an outlier event where we should be getting a pretty good rally, but you know, that still hasn't happened yet. Now, what I was looking for this morning in the Treasury bonds, just going to a shorter time frame, I went to a 15-minute chart just to see what was there, and I could see a very nice ABCD pattern that would come in around 137.04, and the low was 137.07, and now we've rallied a full handle off the bottom. Whether that's the big bottom or not, I don't think it is, but we've been down 7 weeks in a row, so I would be certainly, you know, watching it, you know, very, very closely here for some type of a rally, and that's all it is, folks. This might be the real definition, you know, of a dead cat bounce. Now, yesterday, one of the things that we talked about was to watch the butterfly pattern that was forming in the Dow Jones Industrial Average up there at that 27,000 mark. We got to 26,975, and that was a beautiful ABCD pattern. That pattern completed perfectly from September the 28th to yesterday, and that was spot on right at the ABCD level. And also it was at just a little above the 1.27 expansion, and that is in fact the definition of the butterfly pattern itself. Now I'm going to just take a we've got yeah, I don't have to worry about boat rides for quite a while, Terry. Hold on, folks. All my alerts are going off. I want to see what's going on. Here it is. Good. We're coming down here just a little bit lower. That's what I like to see. Okay, let's move on here to the next one that we want to cover, because there's just a lot of things going on here, folks, especially in the currency markets. Did you get in last night, Ruby? I wouldn't look for much. I mean, I would put your stop. You know, the silver sold, you could get one heck of a rally. I'd use about an 8-tick trailing stock, because this thing is really negative longer term. So I don't. You must have bought it down there pretty good, but you know, just don't let it go to a loss. That's about the only, because it could really run if it goes. Because the shorts, you know, 7 weeks in a row, that's an outlier event. You just don't see that very often. We're down about 8 days in a row, so this is a very, very oversold market. I nibbled at it yesterday, but didn't quite get it. But if you bought it really good, I'd put the stop at break even and see what happens, because it's a bearish scenario, but we could have a heck of a short covering rally on it for sure. Let's keep an eye on that, because it's a very important one. Since we were looking at that Dow Jones industrial pattern that we were looking at, we should switch over here just for a second here to show you the pattern that we're also seeing in one of the other stock indices. And if you'll give me a second, I will be happy to get it up here for us. And that is right here, I believe. Let's hope it is. Nope, that's not it. Boy, I put these things up together to make sure they all line up, and what happens when I get them lined up, they unline. That's a very frustrating thing. I will get it ready here in just a minute, wherever it is. I have to find it. It's the IWM, folks. It's so darn looking, it's so bearish that it's just really, it's just not a very good chart, that's for sure. Let's see where it is. Well, I've misplaced it in the old chart thing. I'll find it by the break, that's for sure, and I'll get up to take a look at it. But it certainly has a, you know, bearish connotation to it, and it has to be here somewhere, and I don't know where it is. Oh, shut the front door and raise your hand. Well, I will post it. I don't want to argue with the charts. I will post it at the break. We got a 2-minute break coming up, and then I'll put up the IWM just to show you, you know, what it looks like. I mean, here's basically what it looks like, but it's a lot lower than here it is right here. But it's actually a lot lower now, because we've broken below the 78% level. We're down around 165, folks. This is the one that we've suggested being short all along, because it's been the weakest of the months. I'm going to cover oil very extensively. In fact, one of our friends from across the pond was kind enough to send us one of his Gann charts, and I wanted to get this up here so you could folks to take a look at it. It's got a lot of lines on it, but this fellow knows a lot about what he's doing, so we'll just take a look at it here. This is oil going back about 10 years, and he's got a whole bunch of Gann lines on here. But basically what it's showing is showing the pattern that I think is interesting, is that we're, you know, those cycle highs that we look at, and you'll see we're over one right now. And if you look at it really closely here, right around this $77 a barrel level, you know, we're setting at a really interesting spot for a 3-drive to a top pattern is what it looks like. Now, if you take a look at the UK oil weekly market, we'll take a look at that also, because that'll give us some more information. You can see also that it's forming these patterns, and of course we're getting news about $100 oil, which every time you hear that, you got to put your tongue in your cheek and sort of smile, because if you remember when Goldman Sachs was talking about $200 oil, it was $141 a barrel, and they were selling everything in sight. We got a caller, but we're going to have to wait for the break. So we'll be right back with Victor from New Jersey.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. Monday, September 24th, TFNN is launching a new updated version of our website. You can still visit us at the same TFNN.com URL, and starting Monday, you'll be able to experience the new and improved TFNN website. If you're a current subscriber, don't worry, your subscription will be automatically transferred. The new TFNN.com will allow much easier access to all your account and subscription information. Get ready for the new TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and we're talking with Victor. Victor, how are you doing today?
Good. Hey, I had two questions. First, cocoa. Did you see a buy in it yet? I heard November it normally bottoms. And second thing, do you think we could be setting up for a crash scenario for on Monday with the 10-year going up to 3.15? Like setting it up, you have that judge getting elected in on Friday or not? And you think we could have a crash like an 87 on Monday or what?
No, I don't see an 87 type crash coming yet. I think it's coming, but I don't think it's coming yet. It's got nothing to do with interest rates because interest rates have been going higher for months. So they're expecting this just because they went above that. Well, I think the market is very, very negative because of the bad divergence that we've had, but nobody talks about it or looks at it anymore. But it's certainly a very negative situation in the divergence in the market for sure. Getting back to the cocoa looks like a bottom to me. It's made a double bottom here around this $20. So I think if you around 20 below 18, I would think it would be wrong. But cocoa has gone nowhere considering what coffee's done. Coffee's rallied 15 cents in the last 6 trading days, and sugar's rallied a couple of cents. So these are turning, and it's at a real critical level. So if you're looking at something,
what about corn too? Because it's following the same exact pattern. Corn. And corn hasn't done nothing in 2 years. It's still at 366.
That's correct. It's making some type of a bottom also. But in fact, all of the soft commodities are.
Is it based on the dollar or something or nothing? Or just the way these guys are hedging?
That's beyond my pay grade, Victor. I look at the charts, and that tells me whether I think it's going to go up or down. I don't know anything about the fundamentals. I have to look at the bottom of the birdcage to find the fundamentals.
So you say they look like double bottoms right now. And what about on fib retracements? I don't see like a 0.168 or anything. You see like a butterfly or a Gartley there?
No, there's just on the cocoa, it's making a 78% retracement with a double bottom. That's what you have in the cocoa. With cotton, with the coffee, you had a 3 drive to a bottom pattern that was, just spot on at 95, and we hit 110, yesterday. So it's had one heck of a move. Corn has made that same type of pattern, and it's also moving in that direction. So that's what it looks like anyway.
All right, so I'm getting ready to nibble there. All right, thanks. Have a
Just,
good day.
Victor, make sure you put a stop in. You always have to protect yourself because these are just opinions. They're not certainties.
Yeah, that's what I mean. Yeah, I use nib and corn, the symbol corn. They're slow-moving funds.
That's correct. They are, so you should be okay. You bet. Thanks for calling in, Victor. I appreciate it.
Good one. All right, bye.
Okay, folks, let's just move on here to the next one we want to talk about because we've got a lot of things happening. Folks, we have to take our hats off to Mr. Z here in the room because just about a month ago, not even a month ago, about 3 weeks ago, he was talking to us about the natural gas. And we were making a beautiful Gartley pattern down there at the 276 level. Boys and girls, look at the right-hand side of that chart. We are trading at 327. We've rallied 50 cents in natural gas in 2 weeks. I mean, just absolutely straight up move. So let's hear the sound of one hand clapping for our good friend Mr. Z in the room because he leads us to the promised land so many times that we have to really appreciate it. Now, if we take a look here at the longer term picture of the natural gas, you're going to see here that many months ago, way back in January, we made a 61% retracement down there at the 252 level. And now you can see we're completing a Gartley pattern up here around this 325. But with this thrust that we're having, it has a possibility of going a great deal higher. But that first 50 cents is in the bag. And we want to thank you, Mr. Z. That was just absolutely an incredible trade, like many of the others that you give us. You know, you're in there all the time. Now, I want to talk a little bit more about the interest rates because I want to show you what I think. You want to see people making a bad mistake. This is what you're looking at right here. This is the high yield, i.e. junk bond yields. You'll notice that they're still way up in the air. They're buying junk bonds. Look what they're doing to the 30-year bond. You know, since the end of August, folks. That's the breakout below the, or the breakout above the 3% in yield. We're 3.35 now in the 30-year bond. How much longer do these people in this high-grade bond, how much heat are they going to have to take before they realize that something is really seriously wrong here and that, you know, it's not the return on your money, it's the return of your money. So pay attention to that. Now, I'm just going to take a wild guess and think that somebody's out there in listening land for TFNN is losing money. Well, I'm going to take just a few minutes here to show you a way to make a couple of bucks that's got a probability of better than 70%. The risk is very, very small, and you don't have to do a lot of work. Anybody that's interested, please raise their hand. Judge's ruling. Time is up. Let's take a quick look here at this apple that we've been following for weeks and weeks. We'll take a look at it right here. You'll notice that you'll see the what's happened here. We had the opening price, and the market opened on the 2nd of October, and it rallied, you know, well over, you know, 3% that one day, you know, going straight up, and it's a really interesting thing to see it happen. But folks, this is really nothing. Just take a look at this Apple chart. Okay, this is the one we started with a long time ago. All I do is update it every day. It doesn't take me a second. But look September 24th, folks. On the 24th, it opened right at the 78% retracement, right on its low. Went up all day long on the 25th. Look at the day of the 27th. It opened sharply higher, but went up the whole day. Look at the day on the 28th. It opened right at a 50% retracement and went up the whole day. Look at October the 2nd. It opened right at a 61% retracement and had a huge move. Look at October 3rd. It opened higher, stayed there, and went higher all the way up to the 233 level, which completed the big ABCD pattern. Folks, you can't make this stuff up. Just if you do, like Twentyman says, defy human nature. If you're losing money, try this out. You know, I bring it in here every day to try to, you know, give you some ideas. Prove it to yourself, because when you prove it to yourself that it's yours, you don't have to share it with anybody if you don't want to. But this is a really good trading system for day trading. And if that's what you're doing, take a look at it. Watch the opening price in Apple. Watch that first 15 minutes, and you're above that price the first 15 minutes, you buy it. If you're below that price the first 15 minutes, you sell it. It's that simple. And but you know, prove it to yourself. Look at the ABCD patterns on this puppy. I mean, there's 1, 2, 3, 4, 5. and that's since September the 19th, for heaven's sakes. Okay, Larry's off his soapbox now. Sorry, I wanted to bring that to your attention because I think it's something that you could possibly use. Folks, we're having tremendous divergence in the market. I mean, like big time. I talked about this on Monday. The market didn't get the lesson, maybe, or didn't get the notice until recently, but the home construction is down, the banking index is down, the real estate index is down, and momentum is down. We've showed you momentum just about every day this week, either through Bill Meridian or Arch Crawford, but these things are not acting good. And now we get to pay a few bills for our good friends at TFNN, 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we want to be looking at the euro here in just a second. If you'll give me 1 second, I have to check the beepers here and things. Okay, it happens to be Apple. Just give me 1 second, and then I will turn it off, and then we will be okay. Okay, just turn it off here. All right, let me move on to the next one. The main thing that I wanted to discuss next, of course, is the euro. if you'll remember, let's get this up here, Larry. There we go. We were looking, we had a really nice top up there at around 1810. And what I wanted to do was to show you that we had a possibility of the euro bottoming down there at that 115 level, but it was coming down, in straight falling out of the sky fashion. So my assumption was it was going to go down to the next level, which of course would have been the 61%. Let's try it again, the 78% level. And if we take a look at the euro here on a 15-minute chart, you're going to be, you'll see what it did. It came down and it did complete the ABCD pattern, but it missed the 1.618 level by 4 pips, which is unusual. We rallied up above the 115 level. However, folks, the key to this, I believe, lies in that U.S. dollar index that we talked about in the newsletter, and we've had a heck of a move that's way above 95 now. We had the ABCD pattern come in last week right at that 93.20, and we felt that that was going to be the controlling thing for the currencies, and the short Australian dollar is continuing to work incredibly well, and the short British pound is continuing to work really well. They don't always do that, but this particular time they are. But you can see here we're almost above the 61% retracement now in the U.S. dollar, so we are coming into an area where we might see some type of resistance, but it's been following the pattern very nicely, and so if you'll pay attention to that, you'll be okay. If you do have an interest in that Apple chart, if you'll drop me an email, I will forward that Apple chart over to you so you can see how simple it actually is to do. You just got to do it, like Twentyman says, defy human nature. Do the work yourself, and you should be okay. Now, if we look at the euro where it completed last night, if in fact this was the completion, you'll notice that we got down with just in a few pips of that exact number, and then we've had a rally. So the $64 question is it getting ready to have more of a rally, or are we in a spot where it's getting ready to have a big turn? This we really don't know. All I know is the divergence that we've seen here in the stock market this past couple of weeks, especially in the IWM, is just incredibly bearish, boys and girls. I don't know how it's going to play itself out, but it doesn't look very good. Now, those of you that were fortunate enough to get into the coffee market, we had that 3 drive to a bottom pattern down there at that 95, 96 level. We got all the way up to 110 and change yesterday. We're now trading at about 105. But that move of 15 cents, that's a lot of money, folks. That's about $5,000 in coffee, but it took a whole week to do it. So that's a hell of a move. And we've seen the same thing happen in the sugar market. The sugar markets also had a big move, but not nearly as much. The sugar only moved, just under $2,000, but with the same type of pattern. And that's the real key of what you're watching here, is to see how these patterns unfold. Now, I also posted this morning, I posted the chart of the Hang Seng Index, and you'll notice that we were looking for a pullback to come in this week because we were right at a 78% level. We pulled back, and folks, we've actually gone below our predicted pullback area. It's gone down to the 78% level. So any more weakness in the Hang Seng is going to be extremely bearish on a longer term basis. Whether that is going to continue doing it that way, I really don't know, but we'll keep an eye on it for sure, just to see if that is in fact what's going to be happening. But we've got much lower prices coming here. The fact is, let me bring this up here. You'll be able to see where we are here in this Australian dollar here on the long-term weekly. We're almost there, down around that 70 in change level. So we got to pay very, very close attention to it because it's at a very, very critical level, as is the British pound. The British pound is also setting up for itself to be a real interesting one. They were fortunate enough to be up there to sell, and now they've had one heck of a move. But at any time now, you could be looking at because our first objective here in this British pound came in just below the 129.80 level, and that's, I believe, where we're trading at right about now. So this dollar index is going to be interesting, and of course it always is. And when I do the newsletter over the weekend, the first thing I focus on is where the money is moving, and that's one of the key things. As we watch going forward, that's what we're looking at. Now, I've had another question about the Facebook. Folks, Facebook to me still looks like it's heading down, towards the level of about 148. That's down about $10. They can make that in a day. If it can drop $40 in one day, it could certainly drop $10 in one day. But you can notice here that you've had this 135 pattern that formed here just a few days ago. We had that perfect 61% retracement off the high of 0.3, and then you had 0.13 and 5. That's the pattern from Roy Longstreet and his son Bill. And that tells us that we're going below 150, and we're 159 and change so far this morning. So that'll be a really interesting one, to take a quick look at. But we've got some, and the banking index is under extreme pressure, folks. We've been talking about that for quite some time, and that tells us that we're at these real critical levels that could cause some real problems in some of these things as far as what we're looking at. Now, there's someone asked actually a crazy question. Well, it's not, no questions are crazy, but just an unusual request, and that is for us to take a look at the lumber market. And so what I'll do is I'll put an 8-year chart up here of the lumber, and you'll be able to see that we are right at a 61% retracement of the low that we made, way back in 2009. We've been straight down. You'll notice that big 3-drive to a top pattern that occurred up there at that 646 per cubic feet in lumber, and now we've dropped in half, and we're right at a 61% retracement of the 2009 low. So that could be a very interesting spot to see if lumber is going. Remember, lumber dropped in half with the stock market going straight up. You wouldn't think that would have happened, because you would think that would be a pullback in construction, which we've seen a little bit of that. But the stock market is a market for stocks. It's traded totally different, and it's gone straight up. So that's neither here nor there, but that's what's happening to it. So sort of pay attention to it. It's a very important concept, I believe. I mean, I'm not sure that it is, but I think that it's going to be. Someone's asked a $64 question about the crude oil. I think we're going to have some strong resistance at the 77 level. That's what we've had so far. We pointed that out to you on the long-term weekly charts before. I don't know if I have them going back that far now, but I do have it in the heating oil, and I'll get that up and let you take a look, and then we'll take a break.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and we're going to take a look at the stock of Oracle for one of our favorite folks here at TFNN. You'll notice that we've had a head and shoulders pattern form. Now, that could have been a triple top. It could have gone up to that area, but it stopped right where it should have. You'll notice with the big gap down, that basically confirms that that pattern is correct. Going above that now, a high that we made just a couple of days ago would certainly make this pattern a broken pattern, and you wouldn't want to be looking at it at all. So if you'll pay attention to that, I think it will be, you'll learn something from it. But right now, that is a major top in Oracle. It is a head and shoulders pattern and also very close to a triple top. But the head and shoulders is valid because the distance between the right shoulder and the head and the left shoulder and the head is, equal. And that's the main thing that you want to be looking at as you go through some of these things each day, trying to find the one that you're looking. Remember, folks, I wanted to bring this up because I put it up for the last couple of weeks here in the newsletter because I think it's very important, and that is this long-term Dow Jones Industrial Average monthly. You can see the ABCD patterns that have been unfolding. And we're right up at some really strong areas there at that 26, almost 27,000 level in the Dow. Remember, we had a big divergence. Now, we didn't make new highs in the NASDAQ, and we did not make new highs in the Russell. The Russell's been rolling over. I mean, it's just been, you talk about a dead cat bounce. That's exactly what you've seen in that. It's just been really, really small, a small move. For anybody's stretch of the imagination. So that's it. The gold and the silver, we backed down to around $1,200 an ounce yesterday. We rallied up to around $1,207. That's right at the 61% retracement of the last high. Silver last night, actually late last night, right before the 4th of October, went right down to the 61% retracement of the low we made on October 1st. That came in at 14.59.5. The low was 14.58.5. We're now 20 cents higher. We've been to 14.80. We're trading at 14.76. So that's holding up, relatively nicely. Now, this morning, just looking at what we're watching this morning on a short-term basis, and trust me here when I say short-term because that's what I mean. Watch the crude oil here, folks, at this. We're looking at November crude now, and we could be looking at a price level of around 75.40. We're trading at 75.58. Now, I'm saying that because 75.40 will be the 61% retracement of the whole day's range yesterday. It's also an ABCD structure coming in at that time, so that's another one that would look, very, very interesting because if it holds that level, it still has a chance. But we're really close to a major top, I believe, folks, in the crude oil, heating oil, and gasoline. They all look like that's what they're doing. But shorter term, if you're trading a 15-minute chart, that's not the same as looking at the daily or the 4-hour. So that's neither here nor there. So keep a close eye on that one this morning because it's very interesting. The grain markets still have more to go on the upside. We've had some tremendous moves in some of these things here, folks, and some of them have been just absolutely phenomenal. Let's just get this last one up here if I can find it. Shut the front door and raise the rent. Let's just see if we can get it up here to find out where it is. Boy, every time I look for one of these things, I just never can find it. That's not a good sign, I guess. But give me 1 second here. You got to give me the benefit of the doubt here. Nope, it ain't going to happen. Shut the front door and raise the rent. Evidently, I did something wrong in my last lifetime to keep me from being a very good technical person, and I'm certainly not that. So I can't show you what's happening, but we've had this tremendous move in the soybean oil market, folks. We talked about that about 10 days ago. It's been up 10 days in a row, straight up off of that 3 drive to a bottom pattern, and that's a really important one, to take a look at. Hey, we got a caller in from South Carolina. I hope you're not around those floods or shootings. What can I do for you?
Oh, I just wanted to give you the, well, first off, love your Dow monthly chart. That's fantastic. And what I called in about was the planet Venus is going to retrograde tomorrow at 3, and that is my my all-time favorite astrological event as far as finances is concerned.
Okay.
You had the Venus went retrograde on March the 9th of 2009, and that's when we had the low in the market.
Yep.
And then preceding that, the high was marked by Venus retrograde. That was a, oh, I have my wrong chart up there. Let me get my chart straight. Apologize. But, yeah, it goes retrograde tomorrow at 3:04. And then, of course, that means it backs up. And when it backs up, it will conjunct the sun, and that will occur on October the 26th. And then it will go direct again November the 18th. And the way this typically works when you're near highs and Venus goes retrograde is you have, and it's putting in a top, you have a double top. And you'll have a top in the period from September the 2nd through now, which is the shadow period. And then it goes retrograde, and it should go down into the Venus conjunct the sun, which is 1026. But I think this time it may be a lot different because of the elections coming, on 11/6, and there's a lot of billionaires out there who don't care for Donald Trump and would love to see that the people who support him to not win. So I could see the markets, those people may be trying to keep the market down through the election. So something to consider there.
Listen, we've already had.
Yes,
we've had two requests to ask you to have you call us back when this your next signal comes up. We actually have. I mean, 2 people from the Tiger Den that said, "Look, got to have this guy on again." So how about you coming back on again? Maybe around the say somewhere around the 23rd, 24th. The full moon's on the 24th. If you want to call back around that time, and we'll spend some time talking about this.
Absolutely, absolutely.
Yeah.
But yeah, I'm looking for it to sell off here through that conjunction, but I could easily see it extend through the election.
Well, listen, thank you for calling in. You've got some great information, and I would really appreciate you give us a call back in a couple of weeks.
Okay, and I may call you back sooner if that'd be all right.
Okay,
go
yeah,
over the
please,
history
yes,
of
I'd
Venus
love to hear this.
retrograde over the last, since the millennium.
Yeah, that's good. We'd love to hear this. Thank you for sharing. This is one of the great things about TFNN is we have some really great people calling in. So we'll talk to you in a couple of weeks, Ron. And how's that?
Very good. Thank you, Larry.
And drop me an email too, if you would, please. LarryPesavento@gmail.com. I think we got almost ready.
I'll send you my charts on the Venus retrograde. Thanks, sir.
Okay, you bet. Thank you very much. Okay, we got to come up here. I think we got to pay a few bills here. We're getting near the end of the segment here, and then we got the commercial, and then we move on to the next one, and we'll see what we're looking at here. So we'll be right back after we pay a few bills.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we had a question about the hogs and the cattle. I'll start out with the cattle. This is a really nice pattern. It's a typical ABCD pattern, but it's basically at a triple top here. in the December cattle up there at that 119.90. We went short for the 24/7 service yesterday at 119.40, and it worked okay so far. It's trading below 118 right now, so it's basically in a risk-free situation. Now, if we take a look here at this live hog market, this was a really great trade coming from our good friend. Looking at the soybeans on the downside, we had the same type of pattern in soybeans like we had in hogs, that 3-drive pattern down there at 44. And we got all the way up to 60. We were looking for it to get to maybe 60 and a half. We've had a pretty big sell-off, so I assume that this is going to be acting like cattle and start to head lower. So that's one of the things that we're keeping an eye on. We're at a very critical level here in the soybean complex too, folks. If we take a look here, just get this chart up so we can see it just a little bit longer time frame, you'll see that we're at some pretty serious 61% level here. Let's just get it so, I can't do it that way. What did I do wrong? Uh-oh, that's one thing you can't do. Okay, can't show that one. Yes, I can. Hold on. Here we go. They get the old pocket protector out of the way. There you go. You see we're right up around this 870 to 873 level. Should be some strong resistance here in the soybeans. We're trading around 866 and change right now. The soybean oil has been up 10 days in a row. If you bought that when that 3-drive to a bottom pattern that we had 10 days ago, now's the time you want to be getting out of it. And because after 10 days, it's an outlier event. It might go longer, but the fact that it got 10 days in a row is very, very unusual. So when the correction comes, it'll be a little bit more than most people think. So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks!